In this video, I want to talk about 2 or 3 different things that will help you entering and exiting your trades. I want to talk about a few trades that I took, some trades that I did not take, and how we can implement these tricks to better prepare ourselves for trades that we might take in the future. These are 2 things that I see a lot of traders struggle with. I get a ton of messages on them, and I'm confident it's going to help correct them so you could take better trades. Before we get into the trades, I recommend everybody to follow me on my Instagram at Ameritrade. I'll post a link in the description below. I post daily trading recaps on here, along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. This is my only account, and you're missing out if you're not following it. But now let's get right into these trades. So the first issue that I see a lot of traders have is they hesitate, they're scared to enter, or they're just fearful to lose money, or they're fearing an unknown outcome. So if you have any hesitation problem, you're scared to click the buy or sell button, listen to this advice. The first thing that I want to say before we get into this trade is nobody will ever know the next outcome in the market. So if you ever see anybody take a winning trade and say, oh, we got this set up, it worked out really, really well, I can guarantee you that nobody knew that setup or that trade would have worked out until after it worked out. Now, what you have to do is you have to position yourself to take setups that give you conviction, that is based off of your edge and your system, that enhances the odds of the setup working out. This is how you build confidence. And a lot of traders do not have any confidence because they don't have an edge or they don't have a system. So when they see the market coming up or down and they see a potential trading setup, they don't have confidence in it because they don't know if the odds are in their favor. So the first thing you have to do is start developing your system and start developing your edge. My edge is price and volume, supply and demand as a core with other tools to supplement that. Now, when I see my edge or my system come into fruition, I never hesitate anymore because I have confidence that the odds will be in my favor. Do I know the setup is going to work out before I take it? Absolutely not. But as traders, we are risk managers. So if we enter a setup based off of our edge, where the odds are in our favor, all we have to do is manage our risk and the outcome is out of our control. Nobody knows the next outcome in the market. For example, if I'm longing off this demand zone, I don't know what's going to work out. And if I'm shorting off of this supply zone, I don't know if we're going to sell off from it either. But I know there are high probability areas in the market that fit my edge. Get comfortable being uncomfortable. Start accepting the unknown. So now let's go over the pre-market plan. I post these every single day in my Discord of setups I'm watching and levels that I'm looking out for and potential trading scenarios. Most of the time, I have a bullish and a bearish plan because the market is unknown and we have to prepare for both sides of the spectrum. So the plan on the NASDAQ today for the long side was we had a key level, which is this dark green line at 12600 and demand at 12478. Both levels remain key. For the market to play to the long side today, we need to see fuel above 12600, a strong break above, targeting 1276 supply, which is this pink box. Also, another bounce off of 12478 demand, which is this green box down here, would be buy the dip scenario. So now we have our levels. This is our plan. This is our setup. When the market is open, nobody knows the next outcome. What you have to do is be patient for your plan or your setups to trigger. So this is an example where the market sold off into this 12478 demand zone perfectly. Nice, strong buying volume out of that. A nice lower wick. We tagged this zone perfectly and we began to move up. Now, if you hesitate, you're scared saying, okay, the market is hitting my level. I don't know if I should enter. Where's my confirmation or what should I do? If you're sitting behind the screens frozen and not reacting to what the market's going to provide you, then you're never going to enter and you're never going to make profits. So just reviewing this setup, I'm going to fast forward the tape. And what we're going to see here is the market aggressively sold off into this demand zone right here. Heavy aggressive sell prints came into this 12476 demand zone and bids automatically stepped in. When you see something like this, this is a indication to take the market long. If you hesitate, you are going to skew your risk to reward. For example, a trader that, let's just say, got confirmation down here at 12490 is only going to have about a 20-point stop loss, versus a trader who hesitates and enters, let's say up here, is now going to have a 60-point stop loss. So for this trade to make sense, if you have a 60-point stop loss, that means you have to have at least a 120-point, 180-point reward to the upside. Obviously, this is a trade that worked out very, very well as we did climb up higher. So if you did chase it and you were late and you hesitated, it would have worked out. But let's just say you did hesitate and you entered all the way up here. Most of the traders who do not implement proper risk management would have stopped out, let's just say, on a dip down over here, and then the market immediately reversed on them after they stopped out. However, if we had an entry as soon as we got confirmation, this pullback right here would not have scared us at all because our entry is much lower, indicating a higher risk to reward ratio. So if you see something that you like is based off of your entry or your strategy, take it. Do not hesitate. What you have to do is manage your risk. I'm okay with taking $200 losers, $300 losers, but if my winners are 2,000 or 3,000 or 5,000, I'm okay with taking those losing trades. Be okay with losing and be okay with the unknown. Another example, this is on the S&P 500 on February 7th. Our bullish plan was if we could get above 4135, which is this green line over here. And again, this is posted 2 hours before the market was even open. If we could get above this, hold above, new demand above, I want to play long, targeting 4172 supply, which is this pink box over here. A lot of people, now obviously this was done on news, but a lot of people will see their plan come into action, but they hesitate because they're scared to lose or they're scared to have their own confidence in their own system. This is a perfect example. As soon as you get confirmation to take this trade, take it. Do not hesitate. Do not wait. If you skew your risk to reward, then that's going to mean your losers are going to be much larger and you cannot afford to lose as often as you have to position yourself to be. You have to position yourself to lose as much as profitable, but when you win, your winners are going to take care of those losers, and as long as those losers don't mess with you mentally, you're going to be fine. Now, on February 8th, Wednesday of this week, our plan on the S&P 500 was supply at 4172, 4184, that we would like to see sellers step in, bring the market lower to play short. I'm looking for sellers to step in here and ways to play short for a move back into 4135 and then 4120, which is this demand zone over here. So now that I have the context of, okay, the market is rejecting supply in the pre-market session, now let's see what the market does as we move lower, or if the market presents signs or ways to play short with the context that we just rejected off the supply zone, and I would use the demand zones lower as a target of price where I'm going to look to sell or cover my short position. Now, the next issue that I've personally been having in the market is my plans and my entries have been excellent. We've been capitalizing, making very good trades. However, due to the recent conditions and kind of just adapting to what the market's providing, a lot of my targets have not been triggering. Now, with this, it's either going to make our profits a little more minuscule, or we're going to stop out for break even depending on how we manage this trade. So if you notice, just like me and a lot of my members in the community, our targets have been very, very close to triggering, but not actually hitting. This is the advice I recommend to you all. Now, with the context of the sellers at supply, this is the intraday commentary tab. This is where I update my thoughts in real time of what I'm watching and why develop intraday. So at 10:45, I said I'm seeing some weakness here develop at 4150. This is what I mean by in the pre-market plans when I say let's look for ways to play short. This is what I mean also about getting creative. This was my way to play short. We spotted some weakness at 4150. Essentially, the market sold off, rallied back into 4150, and started failing. So I said I've taken the market short at 4151. My stop loss is above 4158, 4157, and I was targeting 4135, 4120. Now, this is going to be a setup where my entry was excellent. I had a really, really good setup, and this happened also earlier in the week where I've been taking 10, 20-point scalps on the E-minis, but my profit target might be 25 points away and it misses it by 3 or 4 points, and I'm letting a really nice winning trade delete some of my profits that I had because I only sell if my target or stop loss triggers. So essentially, this is where I entered right here. This was a smaller profit, again, smaller size due to the conditions, but I got short when we rejected 4150. I had a profit target of 4135, but it was really 4135, 4120. So if I had it 2-0 in this example, my planned risk to reward ratio would have been about a 5-to-1 risk to reward over here. If it was at 3.5, it would have been a 2.5. So now what's interesting over here is the market began to sell off, and I did not like the volume conditions as we were breaking the low a day over here. We broke the low and immediately started reclaiming. And I was telling members that this is not the volume that I would like to see here at the lows. I've exited for a 3-point win as I don't see the proper volume that I would like to see for the scalp that I'm in. I'll revisit shortly, but for the trade that I intended for, this is not the volume that I would like to see. So going back and just reviewing my journal, reviewing the setups that I've been taking, my targets have been failing to trigger. My entries are great. I recognized a potential fake low at daybreak, an immediate reclaim, and I got out of this position to protect myself in case the market wanted to continue going higher. That never happened, and we continued to sell off. And if I followed my plan in this case, this is an example of always follow your plan unless a red flag does form. I would have had a nice profit on my hands if I did sell at my 4135 target. So it would have been a $4,000 winner if I followed my original plan. But because I exited this trade prematurely, 1055, I was only able to capitalize a little over $900. It was a 3-point win. So now right at this point, this is when I was telling members that if you're still in short, you really want to see a strong breakdown below 4145. Now, this was a very important area that had to be remained on the charts. There were some strong sellers at 4145 that when I was in this trade right here, that we broke below 4145 and immediately came up. That is when I got out of that position for a profit. Now, we broke below 415 directly after that. It acted as resistance a couple other times. And now that I'm making this video and reviewing it, you know, in hindsight, I should have still been in this trade, and this could have been a mistake on my end. But later in the day, around 1:30 p.m. Eastern, the market rallied back into 4145, where we found that seller earlier, and immediately failed at it and began to start moving lower. Now, this is when I entered my second short position, and again, I left a lot of money on the table because of my protection, because of how I've recently been trading with my targets not triggering. Now, there's two ways you can look at it. If you look at your journal and you say, okay, Carmine, you know, my trades have been working really well, but my targets have been failing to trigger, then I recommend you doing this, what I'm about to tell you. But if you notice your targets do trigger after you sell your position, then you must always follow your plan and only sell if your target hits or your stop loss triggers. No exceptions of that. And it really depends on how you trade and what you find to work out for you the best in the current market conditions. So for me, I'm comfortable leaving some money on the table until it stops working out and I notice my targets do trigger. But the way to do this is this right here. So essentially I got short when we failed at that 4145 level. The market immediately sold off below that, and I took the market short, stop loss about 6 points higher, and I was targeting that 4120 level of demand. My planned risk to reward was about a 2.4. If my stop loss was higher, it would have been a lower risk to reward, but I was only able to realize a 1.35 R. This has been a mistake in my recent trades. It's not really a mistake because I'm still making money, but I'm leaving more profits on the table. So essentially what I do is I see the market come down and we failed at our 4135 level and started coming back up. What I will do now is I will sell 75%, 50%, 95% of my position, hold a few contracts open, and I will keep a couple contracts in case my target does want to trigger, as we came into 4120 perfectly in the day, and this is when I got out the remainder of the position. Now, if I did this earlier, my $900 winner could have been a $2,000 winner if I did stick to my plan. So it really depends on how you trade and what you want to do to manage that trade to fit the current conditions based off of your own strategy. I don't usually do this But due to the conditions and due to the recent setups in my journal, this is how I adapt to make sure I'm taking profits out of the market and managing the trade properly. So do not hesitate and tweak your system and manage your trades properly according to the conditions. I'm going to end the video on that note. Every time I post these videos, I get a ton of questions about how to join the Discord. The Discord is only available for Invest the Trade course members. The link is in the description below. I do not charge for the Discord, and mainly all the education is in the course. But I'm going to end it on that note. Peace out.